All right, everyone. Appreciate everybody tuning in. Great to see everyone. Thank you for spending your afternoon with us. My wife is over here reminding me to smile at you guys. So here's my smile. No, we're excited. We're really excited to share this opportunity with you guys. For those of you who don't know, maybe there's some family, friends, people that haven't met me yet. My name is Zoe Azubuki, and I am joined by Troy Cohen and Bobby Brown, who's part of our development team. I'll just quickly scroll here so you guys can see our mugs. Um, you guys can read these. Let's minimize that. You guys can read our bios, but we won't take too much time kind of doing an introduction here because we do want to devote the time to helping you guys understand this investment opportunity. But real quick, just want to say it's really cool how God works. Relationships is something that Troy, Bobby, and I have had with each other for a good while. And what ultimately brought us together, guys, I mean, it's probably as simple as saying basketball and Jesus, right? Like we all love basketball and we all love Jesus. And years ago, like over 10 years ago, we were doing basketball ministry. We've all played it in high school, collegiately. Anthony on our team, as you can see, obviously he played in the NBA level. In fact, Anthony and I think we did a basketball movie called Mid Range. It's not even something that we would include on our bios. If you look at our LinkedIn, that's not something that we're too proud of. But point is, basketball travels, right? Basketball has us meet people and has us experience some pretty cool things. And we all met with those same things in mind. And it's just pretty cool to see how God's just kind of done different things in our lives through the years. And we've stayed in touch as friends. And here we all are with this real estate investment opportunity. So the way it's going to work, guys, we're going to kind of pass the baton. I'm going to have Troy kind of introduce the whole Praso Ventures, and then Bobby's going to talk a little bit as well. As you guys have questions as we're addressing and going over this presentation, feel free to post it in the chat, and then I'm just going to kind of oversee that for us throughout the presentation. And at the very end, we're going to have a elaborate Q&A where we will address questions individually and just kind of camp on anything that's outstanding. But just know, guys, that our goal is to help you guys fully understand exactly what this investment opportunity entails, and not only to fully understand it, but have the confidence by the end of our time here that this is an investment that will be a good investment because it really is a straightforward model. And so we're really excited to share it with you guys. So without further ado, Troy, I'm gonna turn it over to you. Let me make you a host real quick so you can share your screen
Cool.
and take it away, brother.
Awesome. It says disabled. All right, guys. Yeah, thank you again for taking the time to join us here today. Zoe, appreciate all that. And yeah, I think what's super special, as Zoe alluded to, is that the uniqueness in how we met. You know, here we are, 12 years later, and we're sitting here on this. And Zoe, can you go ahead and reshare that screen? It's giving me some issues, and I don't want to take the time here. Just bring up that deck.
Okay.
Actually, I think I've got it. Good old Mac. So if you can work on just resharing that
Okay.
that deck. So yeah, guys, super special how we are 12 years later, and over the years with our friendships and the families and whatnot. Wanted to give you some quick background as to Praso Ventures and how we've arrived at this point. So in the time of Maui, Bobby was in the midst of building an online advertising agency, and he'll give you a little bit more background on that. But he had a successful exit in 2015. And since then, over the past 7 years, he's been in the venture capital world. And with that was really assisting friends and family, helping them place their investments, overseeing it, managing it, and really doing it with no fee at all. That was really his heart behind that. And, over the past 12 years, ever since we met in 2010, Bobby and I have always found ways and opportunities to do deals together. Whether it was group fitness franchise concepts, real estate, we always found ways to do deals together. And so then over the past 7 years, as he exited his online advertising agency and the deals that we were doing, we had more friends and family that were wanting to participate in what we were doing. Fast forward then, and as of a couple of years ago, suddenly lost my father, and we were in this place of, then my mom was kind of in this place of not really knowing what the whole financial world was all about. And so it was kind of a perfect storm, so to speak, of all these friends and family looking to participate in more deals and the future deals that we were going to do in this perfect storm of kind of my family dynamic, where we said, hey, we need to officially have an entity and an operation here, because we're getting ready to embark on some very, very exciting opportunities, and this one in particular with Inspirato. And so that's really how Praso Ventures came about. The uniqueness of the name, it ties to the name itself, and the LLC itself was an LLC that I created with my dad. He was a commercial contractor in the commercial space for 45 plus years, building anything and everything other than a nuclear power plant was always the joke. And so, you know, when Bobby and I were talking about what name would we choose, what LLC would we choose, you know, because of our heart and just the relational aspect that we value so much, it was, I think, a really special, and it was Bobby that actually said, no question, we're going to use that LLC. So a little bit of a special background into kind of how Praso has come about. And so here we are today with this opportunity rolling out with Inspirato. Wanted to get into now. So Zoe, if you can just go to the Inspirato partnership slide. So this is what we're discussing here today, everyone. The uniqueness of this, I'm going to kind of segue over to Bobby and let him really discuss how this Inspirato partnership came about with his online advertising background, and also one of his real estate ventures in building one of the homes on the very top of Breckenridge Mountain. So Bobby, I'll let you take it from here.
Yeah. First off, good to have everybody here. Thanks for the time to hear us out and listen to us as we have an exciting opportunity and try to raise money for that. Inspirato is a company based in Denver, which is where I live. And I was doing two things for them at the time: was building a home in Breckenridge, at the same time doing some consulting for them as part of my post digital media days, was just kind of consulting for them for a couple years. And around that time, just struck a good relationship with their leadership, executives, and we did a lot of game planning of the stuff you see now. If you follow Inspirato, if anybody knows about them and their past program, helped, you know, some of the marketing of all that. And basically, you know, learning as the IPO came, you know, the conversations probably 2 years ago about Inspirato going public, and just kind of the asset class they had to live in, being a tech company, you know, traded on the NASDAQ. It was becoming clear they were not going to be able to take real estate positions, just because the venture capital dollars didn't allow that. It would have been a totally different asset class. So the opportunity was to be more of a landlord for them instead of just continue to consult them on the digital media side. So of course, I'm like, well, what does that look like? You know, I've already done some real estate. We already did Breckenridge. That was a great project. And that conversation evolved into like, hey, there's some markets that the Inspirato members are desiring to be in. And some of those markets lined up with those that we had good real estate contacts in and already had some good momentum there. Two of which, you know, you'll see today: Scottsdale and Austin, Lake Travis. So basically they were tasked with trying to add inventory. And inventory for Inspirato is a single family home. They desire to be like the Four Seasons of single family homes. And then if they can do it in a way where these homes can share amenities and share a common space, it's kind of the perfect blend of, I guess it allows them to be their best, Inspirato, in terms of programming vacations for their members. So anyways, that model came about whenever a property was proposed for sale that we had through a broker there that was a good friend. It's 60 acres on Lake Travis. It was purchased a little more than a year ago, November 12th last year. And of course, we purchased it the whole time, vetting with Inspirato, saying, hey, what are we thinking here? What do you want to do? Like, how many homes? What does the programming look like? So that just kind of evolved into what you've seen now. If you guys have taken some time to look at the land plan, which Troy, you may want to show that at this point. This is essentially what we'll be doing is we'll be building 25 single family homes. Yeah, that's a good slide worth noting, just the different markets Inspirato is currently in. And then at the bottom of that page, they've essentially like tasked us with these markets of adding inventory in at the bottom of that page. But
and then Bobby, why don't you go into the investment model, the overall model in terms of Lake Travis, Scottsdale, these different markets around the country that we've kind of been tasked with, so to speak, or at least the markets that we are eager to go to next. So as we get into then the investment model.
Yeah, right? I think it's pretty simple. It's like basically Inspirato will commit. I mean, in writing, we have it now. They're committing to us a fixed income lease upon completion of the homes. So we essentially have to just go build single family homes, and upon completion, they will, begin leasing it from us. They can't own the home. Of course, they can incentivize us to build the home, which we've negotiated developer fees. Even some of the lease will be accelerated at the front end is what we're talking about. We're going to get them to cover the cost of the furnishings. I think there's a lot of negotiation points in there, but I feel like, having known them and done it before, I think we're navigating that one as good as we can. Yeah, I think it's more simple than not. Finish building the homes, and whenever they're all done is when the lease begins, is the essential model. And if you mean the markets, Troy, yeah, I would say they love the Scottsdale market. It's great for short-term rental. They actually measure markets based on like how many months of a year they can activate it. Typically it's based on weather, it's based on activities. Like a good example in the mountains, like they would consider that a 9-month destination because there's 4 or 5 ski months, then there's the summer months, and there's 3 months when it's dead, like shoulder season as they call it. And then markets like Lake Travis are 10 months destinations because there's really only 2 months where people don't want a vacation there, which would be January, February. Scottsdale is an 11-month vacation spot. There's really only 1 month when it's, kind of miserable and chilly, and maybe some of you hear that, but, and then there are 12-month destinations or places like Cabo, Punta Cana, places where it's always nice. America doesn't really have a ton of those. Maybe Florida, you could argue, is 12-month, but so yeah, we're in a 10-month destination here in Spicewood, and then an 11-month in Scottsdale, the 2 projects we're working on right now.
Yeah, and everyone, if you think about these various cities that we're looking at, right, these are all vacation destination cities. So as we talk about, that third on the investment model, the third column is the appreciating asset, right? So all of these areas are desirable destination cities. And so the appreciation of these assets over the years is essentially, it's going to happen, right? These locations are very desirable, and it's going to continue to be that way for quite some time. Bobby, do you want to talk a little bit about the liquidity cycles and some of those events?
Yeah, I think so. Going back to your last point, I think appreciating assets is worth mentioning, in addition to the fact that we're building equity. Like if you take a 60-acre parcel that's in a rural portion on the lake, like because you're building amenities, because you're building a restaurant, because you're doing things on site that are like activating and then huddling houses around that, like you're essentially building additional equity and appreciation in that as well. It's mentioned there. I just think it's worth noting. And then, yeah, liquidity cycles are, I feel like if we take the time to dive into the pro forma, which is pretty robust, and I'm willing to do that with anyone, on a call after this, or maybe even a little bit now. Liquidity cycles come from selling homes along the way. Inspirato has a real estate division of a lot of buyers that want to own an Inspirato home. There's 2 ways to become an Inspirato member. It's to pay like $35K up front, whatever the number is now, 30, it's changing all the time, but there's ways to buy into the Inspirato program on a monthly basis. You can pay annual dues or pay a lot up front. So you can do that and pay money. And then you can also come in through the back door, which is, how an Inspirato landlord would. By buying an Inspirato house, you get a free membership, essentially. So we are selling homes to Inspirato real estate investors that have already mentioned they're looking for a home, a second home on the lake, in Lake Travis or in Scottsdale. And they have a very large database of folks that are looking to buy Inspirato homes in different markets, but those are the only two that apply to us right now. But yeah, those liquidity cycles come upon selling those homes. The stuff that we do retain and we choose not to sell, which would be like the common areas, maybe even some of the homes for ourselves, that would have its own lease attached to it as well. The refinance of those homes, which would be traditional investment home mortgages, those would be that'd be a liquidity event. I think the developer fee, paid by Inspirato upon completion, that's a liquidity event. I guess my point is, like, at different points along the way, like, there's return of capital for investors in addition to the monthly cash flow when it's all done.
So I jumped to the numbers. We all talk through that.
Yeah. Bobby, why don't you talk about Shoreline in particular?
Yeah, so Shoreline's the one we've been working on the longest. We've actually owned it a little more than a year, as I mentioned earlier, and these homes in the blue are the ones that we have buyers verbally desiring. I can't say committed or papered up, but you can't sell a home until you have a price of those homes. We're not sure exactly what those prices will be, kind of based on market comps, and obviously rates are changing like crazy right now. That's a moving target in terms of trying to nail down what we're going to sell them for in 2 years. But we're selling the homes in the blue, and everything in the green we desire to retain. These numbers are the closest we're getting right now in terms of cost basis. They could be wrong, up to maybe 5%, we think. But the cost of these homes in the blue will be 1.57 million. And then we're thinking, just based on the homes that are selling nearby that are very similar square footage and bedroom count, they're going to be selling like in the 2 million range. Ours will be a little bit nicer finishes wise, just because they're going to be an Inspirato home. Those homes will sell for 2.1. Maybe we think maybe the 5 bedrooms go for a little more than the 4 bedrooms. But yes, Inspirato's lease commitment is right there, that 120 to 130K annually. I don't imagine that anybody on this call is going to be an interested home buyer, unless you've always wanted to have a home in Texas on the lake and not opposed to that. But I think the model that we're looking for an investment assumes that somebody else is buying these homes from us. Which, if you know hospitality at all, like any background, like it's pretty common of a model. Like you see Ritz-Carlton does it, Four Seasons does it, even Montage does it, where they build these resort communities and they also sell some homes off, or condos, to kind of create liquidity events along the way to help pay for the rest. So that's part of this model. That's why the investors, should do fairly well. But anyways, numbers worth noting, cost basis. That's essentially what Inspirato's paying us a lease on, is the cost basis. And then, the projected value upon completion, we're projecting it'd be at least 7 million more than we're in it for. We're trying to raise currently 8.5 million for this project to get it all the way from start to finish, carrying cost, everything. And then at the end, the value should be more than almost about doubling, what you're in it for upon completion. Lease payment is committed by Inspirato. We already have that papered up. And like we've said, upon completion, they will pay that lease to us, which is what creates the cash flow you'll see in that financial model.
And that lease agreement is for how long, Bobby?
So we actually want it to be less years because of the just ability to renegotiate. Inspirato would desire to lock it in for 10 years or more. But just imagine traditional, retail, like we want to have rent escalation clause. We have the ability to renegotiate. They're going to try to lock it in for longer. Right now, it's looking like the sweet spot's going to be 7 years, just because of some of the debt service coverage ratios, trying to make sure like the lenders are getting what they need to see. So we're estimating the lease lock is 7 years with Inspirato. And then at that point, I think, we have the freedom to renegotiate, refinance, or sell sell the resort, which would, either one of those would be a liquidity event for us as well 7 years from now.
And ideally, there's what, 18,000 Inspirato members that might be interested in buying it as soon as completion, as soon as these properties are complete, correct?
Of the homes, single family homes, yes.
Yeah.
I was even talking about selling the whole resort. Like, there's, private money, REIT money, like, because the cash flow is attached to it. Like, you have cap rate buyers. Like, also the sale of the whole resort 7 years from now could be an option. In addition to just, if we decide to keep it, we'd refinance and keep the cash flows.
Yeah, and if I can just add to that, we essentially have all the leverage here, right? We're building in these vacation destination cities. As Bobby just alluded to, it's more advantageous for us to shorten the lease. Of course, Inspirato wants the longer lease. But it's, we essentially have the most leverage here. Inspirato, in going public this past year, is in, I don't want to say desperate, but for lack of a better word, desperate for more and more inventory, right? They have to increase their inventory, and they're going to increase their inventory. And that's why we have the opportunity that we have. But, the leverage is here that, we have a very, very desirable product. Lake Travis, Scottsdale, these cities that we were going to are very attractive. And, these second, third homes, just an investment home, Inspirato buyers, you can see on that land plan, it specifically says the blue part is, being offered to Inspirato members. And that's why you'll see at the very end, when we get there, that's why we've opened up that opportunity. Because, selfishly, we'd like for our own friends and family, just from a pure enjoyment standpoint, we'd rather our friends and family be a part of these communities than, random people we've never been associated with before. So
yeah, I think it's a good point. I feel like it's worth mentioning. Inspirato is not the only person that can manage a single family home on Lake Travis. Like, you have a lot of competitors, folks that may not be as big or desire or are bigger, like the Airbnb Lux division. Like, there's backups in terms of other managers. I think another backup option, worst case scenario, is to self-manage if we had to do that one day. But, at the same time, like, in terms of protecting the investment and the assets, like, if we just, worst case, if nobody decided to vacation anymore, like, you could actually sell off every home on its own parcel as a liquid asset, a single family home. So I think you have some of the safety there in that.
Now, I think the simplest way to kind of think of this is a lot of us are familiar with the new build process, right? So think of that basically with us being just on the ground, the actual developers. And our new builds are high-end luxury rentals, luxury resort rentals. And so I don't know if we have a content, Troy, of the actual views of Lake Travis or Scottsdale, but if you guys see the pictures of basically what these properties are going to be built in, like, the areas that they're going to be built in, it's just gorgeous views, the waterfronts, the mountains. And is that part of the deck here, Troy?
I would encourage everyone to click on that video tour on the Shoreline Resort page. So the slide up, Zoe. So go up one from there. Yep.
Yeah,
Video tour. Yeah, I would encourage everyone to to watch it. It's absolutely gorgeous. Again, there's going to be no shortage of demand for such properties like this.
Yeah, and that's the exciting thing about what we have here is these are the type of areas that Inspirato wants to continue to build developments in, for years moving forward, for many years moving forward. So this is a really awesome opportunity for just the growth, in this space with a very, very reputable company. So
yeah. So why don't we?
Someone wants to add. Bobby, can you talk about the your experience with the Breckenridge and like the numbers on that? It's like a record sale and just explain like what you built and why it turned out the way it did. I think that's a good example of what.
Yeah, I think it's worth noting I was already in their office pretty much on a weekly basis because we were doing some of the digital media consulting while building this house in Breckenridge. And, you know, you're looking at it now. That was essentially after we had that exit in 2015, we started building this house. While simultaneously consulting Inspirato, I worked closely with like their design team, their furniture selection team, their real estate team. You know, we determined 7 bedrooms was like the perfect bedroom count. Obviously, being on the mountain to ski in, ski out, that was part of it. It was built as an investment. I think I wasn't even that big of a skier at the time, but you know, when you live in Denver, it's like one of the things you do. It's like you own a mountain house. So it was built as an investment, which is one reason why it didn't make it hard for me to want to consider selling it whenever we got offered 17 million for it. But we were in that house for like a little less than 6.5 million between land purchase, the construction costs, but it had a lease on it. It had an Inspirato lease committed to it. And, you know, that also helps sets the value of a certain home where it's worth more because it has a cash flow attached to it, which essentially is the same model here for those that are buying the homes. And there's a reason why people want to own Inspirato homes because they're getting a monthly, you know, cash payment from them in addition to owning the house. So yeah, that sold June last year. That was actually how this combo, you know, started about 1.5 years ago, saying, hey, how are we going to roll this over into like the next development? And that was when Lake Travis became kind of the, I guess, desired commitment at the time. But yeah, if you want me to share before you go into Scottsdale, I can share some of the renderings.
Yeah.
You can do that. You need
Yeah.
to make me a host. So
Yeah, I'll make you a host.
I think also worth mentioning is Inspirato, like they're all about programming a 7-day vacation with, you know, how they choose destinations. So in this case, it'd be like total hill country, like, you know, there's winery, there's the city of Austin. So can you see that now, some of the renderings?
Yeah.
So yeah, this is essentially like the inspiration behind the architecture of the place. I think it's a lot more humble, you know, it's more like hill country, Texas gable roofs. I don't want to say farm style, but yeah, I think it's worth, this is what we're thinking the homes will look and feel like, still luxurious. And then let's go to the interior finishes of the homes, which is a little more along these lines. And this is part of the design process of working with Inspirato. Even our team, our architecture and design team will look like this. If you guys want any of this info, like it's actually listed out, we can talk about, you know, all this stuff. And then this is actually one of the cooler ideas I think it's worth showing. There's a company that's going to print 3D print homes. They're based in Austin. They're actually pretty high profile company called Icon. They 3D print homes. They actually 3D print stuff for NASA. They're working on 3D printing something on the moon right now, where they like, but at the same time, they're home printers, and they're going to help us design a restaurant and the spa and some homes on site. This is currently the clubhouse portion of the property, and we're in the middle of designing something that looks like this using their 3D printing technology. That's what a portion of the property looks like right now. And they're going to try to mimic that with this restaurant that kind of has like this 3D printed entry with the restaurant sitting on top of it. We have to raise, because of a floodline elevation issue, we have to raise the restaurant about 8 to 10 feet higher than the existing elevation. So something like that, where these walls here will be 3D printed and the restaurant will kind of sit on top of it. And that's actually going to set the tone for how this resort will feel. It's a concrete, like a proprietary concrete technology that Icon prints that's going to make this a pretty high profile project, I guess, operation. So there's some other renderings of it, and this would be like walking up to it from the lake, you know, coming from, like, this would be like standing on the water side, walking back towards the restaurant portion. So if you study the site plan at all, like, this will make a little more sense to you in terms of where it sits geographically. But yeah, I think that's the idea there. This is a 3D rendering of the resort itself right now, coming from the water side. You'll see that the stuff that's in white is likely going to be an Icon printed structure, not the clubhouse here. That's a mistake. That already exists. That's actually the one home that came with the 60 acres that's being converted to the clubhouse. But yeah, that's essentially the idea. You're in the hill country. It's 2/3 of the property is wrapped by conservation easement, which will never be developed, which would keep it super serene out there. And then the southern track down here is where a few of the comps exist to set the home value to 2.1 million. So anyways, yeah, that's worth diving into before going to the next city we're discussing. I can jump into the financials if you want me to, though, before going to Scottsdale, or do you want to kind of continue going through?
Yeah. Let's have you, let me pull up the PDF, the deck again real quick, and then let's talk about the finances on that. For the, where is it at? This one here? This one you were talking about?
Which one's that? What are you looking at?
The Alameda 33?
Yeah, let's continue going through Scottsdale, the Alameda 33, and then we'll come back to the financials of Shoreline. I think it's worth noting because we've owned the property a full-blown pro forma on Shoreline, whereas right in North Scottsdale, we don't have those yet, but it's essentially I think the proof of
Sorry guys, is everyone still there?
We're here.
We're all here. So were you going to show this Alameda?
Yeah.
Okay.
Is it showing now?
It says you've started sharing the screen, but we see a blank image. There it is.
All right, so next project is in North Scottsdale, Arizona. So again, one of Inspirato's heavily desired areas. Anywhere Phoenix, Scottsdale, Arizona is a very desirable place for their membership base. So I will say we were very fortunate, very blessed to basically fall into this opportunity here. Bobby and I had owned 2.5 acres that we had purchased through a great friend and mentor of mine. And you can see, so if you go one slide up, if you see there the homes that are being built just to the south of us, that is a very prominent luxury home builder here in Arizona called Camelot Homes. And they are building on some 20+ acres right there to the south. They were under contract adjacent to our 2.5 for another 30 acres. And they had to basically bail at the 11th hour as the city of Scottsdale wasn't going to approve, they found out at the 11th hour, their zoning efforts for an increased density. Basically the most density that you could get, they were going for. And so we had that conversation with Camelot, and because we were in our own rezoning efforts on our little 2.5 acres, we just basically fell right into this 30-acre deal. So very excited about it. It is in the super pristine backside. That mountain that you see right there is what's called Tom's Thumb. Very, very popular hiking spot here in North Scottsdale. And this little pocket is essentially the next spot in Scottsdale, North Scottsdale in particular, that is being developed, right? If any of you are familiar with Phoenix, Scottsdale, it's all about the expansion outward. And so this is the next pocket here. You've got 3 to 4 of some of the biggest builders that went in and basically tried to buy up as much land as possible about 3-4 years ago. And we've just been very, very fortunate, very blessed that we've now been able to get our hands on 30 acres. Next slide, Zoe, will show there's 2 different land plans site plans that we are discussing here. We are currently zoned for R1 130, which is 3-acre lots. And that's why Camelot had to essentially bail on this project, is because as it's currently zoned on a spec build, it does not pencil. It doesn't pro forma well. And so that's where we, in our model, because we're not a spec builder, we are a build to lease essentially. And even at R1 130, we feel comfortable, and we're still running those numbers that it'll pencil very well. So The right side behind that breakdown is where is the site plan for the 10 homes as it currently stands at R1 130. The left site plan, you see there are 14 residences, and that's our rezoning effort to get to R1 70. And we've got initial feedback from the city of Scottsdale. We've got an attorney that's doing the legwork, that we've got pretty good confirmation, and we're continuing to do that due diligence that we'll be able to get that R170. The city of Scottsdale was not okay with the R135. That was way too much density. So we're hopeful that we'll be able to get 14 residences. You can see the land purchase price. We've already got some numbers back on the construction. On a 3-acre lot, you're going to have a gorgeous home with, each home is going to have its own resort style backyard. It will all be encompassed around a clubhouse as well, shared amenity space. So we're looking at about 2.7 million on a cost of a residence. The home values are much higher here. And I would say, and much higher here than per se the delta of Lake Travis, is only because North Scottsdale is, and Bobby, you might be able to speak to this, is that, North Scottsdale is a little bit further along in the development process in terms of the overall infrastructure of North Scottsdale. Lake Travis is still, that part of Lake Travis that we're on is still developing. And so the home values here in North Scottsdale, you see that, we're building it for 2.7. Home values are going to be around 4 million.
Yeah.
Go ahead, Bob.
I'll add to that. I think it shows what a mature short-term rental market is. If you guys know much about the legislation of Arizona, when it comes to short-term rental and permitting, like they did a great job of saying we're going to be the most, kind of like Florida, like the most bullish in terms of allowing it with minimal like issues of getting a permit. It really shows what it does to real estate values when somebody can own a second home that they can not only use, but they can also put up on Airbnb and make 120K a year. It's like side income. And, in a world where people don't want to be in the market, or some people don't want to be in the market, if you were to tell them they can go own a home in a market they want to visit and make cash flow from, I think Arizona is a real life example of like a mature short-term rental economy where like I said earlier, it's 11th month vacation destination. So, the demand exists. And I think what it also proves is kind of the upside of an immature, like Lake Travis is still up and coming, what it looks like, what appreciation could be like, as Texas tries to mature to that same type of thing with short-term rental. So I do think, it's a great area. We all know why Scottsdale and Phoenix is awesome. But I also would say because of that legislation, anytime like bills are passed or proposed to try to hurt short-term rental, like it gets shot down immediately. It's just like, don't hurt our economy. Like it's a big part of what helps support the real estate values there. So I think it's also worth mentioning. Go for it, Troy.
Yeah, thank you, Bob. The desirability of a North Scottsdale, again, not sure how many people have been out here, but it's pretty special place. The weather, the destinations, as Bobby's alluded to, lots of things to do here 11 months out of the year. We've enlisted probably one of the best architects when it comes to home building, clubhouse, and whatnot. Swaback Architects. They are one of the best. One of the cool parts was that we were instructed that we needed to speak to Swaback, and come to find out that's actually who Camelot had enlisted for their architecture on this property. So we were able to walk right into, as I said, one of the best architects here in the state, and they had already got their hands around this entire property. So we've been able to make up some serious ground in a very quick time, as we've enlisted Swaback to help us with just the overall plan. And it also helps that they are very close with the attorney that we've enlisted for this rezoning effort. But still, worst case, if it is 10 residences on 3-acre lots, we're still very, very confident and comfortable that the pro forma will still work very, very well.
Well, and we have commitments from Inspirato on both. Like they would take 10, they would take 14. 10 we can do for sure by right. 14 is desired. You can see why there's proposed 14 with more natural landscape, because that's essentially why we're proposing the upzoning. It'll add value to the land immediately, if we can get the upzoning, but if we somehow can't get it, which we're thinking it's like 80–90% likely, we still got a plan and we're still gonna proceed.
Does anyone have any questions? I've been checking the chat just to make sure. Anyone have any questions at this juncture for Troy and Bobby to address? If not, we can just keep it rolling. Oh, my wife has a question. Hold on.
Yeah, I have lots of questions. So I do love that there's so many outs with it, whether it's selling off individually, selling off a couple, switching platforms from Inspirato to Airbnb Lux, or just, I don't know, you guys said a bunch of them and stuff, but on the Lake Travis one, is on the restaurant, is that going to be open to the public, or is that just for people that, and you're gonna have a clubhouse? Is the restaurant just open just for the guests there at the houses, or is that open to the public?
Yeah, it's a good question. So initially, Inspirato was planning to license just an F&B program for the resort. And that became a full-blown conversation about just kind of the success in the area. So we plan to, at this point, have a restaurant operator lease that restaurant space and serve. Inspirato will be like license, basically like a certain menu for the resort that's for the resort in addition to open to the public. So you'll see in that bottom right corner, it's kind of covered up by some of the shoreline resort breakdown. Actually, let me share my screen. Zoe, you got to make me the hosting because I'm going to show the financial in addition to the land plan.
Yep, it's on you now.
All right. It's a good question, Michelle. Can you see the land plan now in fullness?
Yeah.
So yeah, the lake, you can see it on the east side. This portion here will be, we've already been granted what's called a courtesy dock by the Lower Colorado River Authority, the LCRA. That courtesy dock is going to allow people to pull their boats up and they can park for the day. It can't be parked overnight. So we can have plenty of parking for boats via the water. Probably be like a golf cart valet because it's a good, I don't know, 300-yard walk from that water to the resort, to the restaurant. So it'll be open to the public from the water and the roadside, Michelle. And then you'll see gates. If you notice where my mouse is kind of hovering, there's a gate here and a fence all along the south end of the blue. And then another gate here. So anything that's on this side of the resort on the north side would be more of like private, exclusive, like Inspirato only. Like imagine, folks be like, what's going on back there? Like there's something back there that's the best real life example we have. And maybe some of you guys don't know this place, but you could look into it. There's a place in Cabo called Flora Farms, which is a restaurant, a very popular restaurant, and an owner's quarters, like a private, like resort, like owner's side. And they do a great job of having like fencing in some areas. Of course, there's security. But they do use the landscape to create some buffers, which is what the plan is in here. So it will be a resort and totally private, exclusive, everything north of that. But Michelle, to answer your question a long way, yes, the restaurant is now going to be public facing. It'll be a more high-end experience. The price per person average will probably be on the higher side instead of like just a, brewery or something. But that's the plan right now. And I think it makes sense if you're going to put something out here for the resort, like also open to the public is going to help support some of the values and bring equity and activate the area as well.
Okay, very cool. And is there, I don't know how Lake Travis that well, but is there like a beach over there? Do you put sand in and swim at it, or people just boat on it and such?
So it is a river. If you think about it, Lake Travis is just the Colorado River, a really wide portion of it.
Okay.
And there already is naturally like sand that's there, but anything you try to build, like you run the risk of like floods, it just kind of gets washed away. But naturally, if it's like it is in this picture, it's sandy here, but if the water's higher because it's rained for a few days, it's likely that the grass kind of goes into the beach. We've talked about right over here, development of just putting more of like a concrete type, like a wider access, like a swimming hole type thing over here. But that's, I don't know, I think either way, like it's nice gradual water access as you get down there, whether it's sand, which exists currently, whether it's grass, or whether it's something we like manually like build down there.
Okay, and my last question for now is, what would you guys say to, the idea of a recession is looming, a recession is here, or prices go down, or all that kind of stuff? So how are you, protected against that? And what happens in a market, like in 2008 when we had the big housing crash and prices go down, market goes down? How do vacation rentals, I guess these are higher level luxury vacation rentals, weather that type of storm?
Yeah, I mean, when Troy said earlier about like how Inspirato is desperate for more inventory, I think a better way of defining it is if you look at their financials, because they're publicly traded now, they have like 107 or 108 million cash dedicated to growth to support the next 10, 20 years of paying for things like this. So you have a publicly traded company that's signing a lease commitment to continue to lease this. And I know it's only 18,000 members now that are Inspirato members that support this whole model, but like I do think they're more insulated from a recession. Granted, how insulated, that's a relative question. Yeah, I think the worst case scenario here is if we don't find another operator, if Inspirato like lease expires and they want out, we have other operators that we could consider. One of which we already know is the backup and has said, hey, let us know if that doesn't work out with Inspirato. But at the same time, self-management is a third backup option to say, hey, like it's not, some of us manage short-term rentals, like we know what that looks like. So that's third option. The fourth one is just selling off homes. This will be platted. If you notice the dotted lines here, these will have homes on them, and it will be platted to where it could still be sold as its own parcel. And yes, the clubhouse, you could argue, and with all the amenities, is more of a common space. It's hard to sell that. But I think in terms of like worst case scenario, if we had to get out, like we could get out a majority of the value in equity. That's why you invest in real estate, right? It's because you have something tangible to sell at the end of the day.
Especially when basically Inspirato is helping us have a guaranteed cash flow. When you have a lease agreement, right, locked in, it's basically guaranteeing a certain amount of cash flow that we can count on for at least the next 7 years.
That's right. That's right. Yeah.
And what I learned from watching tons of Bigger Pockets podcasts was that during the 2008 recession, the vacation industry only went down 10%. That's it.
Yeah.
In 2008. So that amount is, and I would imagine, do you have an idea of what the average income for the Inspirato members is? I would assume it would be higher, high net worth individuals. Go ahead.
Yeah, probably higher than the average vacationer. Because I helped build their marketing plan, I know that we don't serve ads to any household income that's less than 250,000. That's just an Inspirato ad trying to get new members. So I think you could argue it's the median is well above that. But yeah, I think it's good to be aware of. It's good to ask the question. But I think if there's a group of folks who are going to continue their vacation, that's probably the Inspirato members.
Excellent. Thank you, Bobby.
And Bobby, do you know how many of those 18,000 members are actually Inspirato homeowners?
Yeah, it's about 1,100 of them that are in through the back door, like I mentioned earlier, where they joined a part of real estate. Like in our situation, like they're allowing our investors also to have memberships, which I do think is worth mentioning. It's nice gravy on this deal. It's not going to be showing the pro forma, but like there's group community developments that they've done where like multiple households get an Inspirato membership because they were part of investing in a development like this. So while they don't have 1,100 homes in their portfolio, there's 1,100 landlord entities, I guess.
Nice.
Yeah.
Thank you.
Yeah, I do think it's worth diving into the financials here. Can you see that on my screen?
If you can zoom in a little bit, it's really small print.
Yeah. Better?
Yeah.
All right, I'm gonna go high level. I'm gonna start. I'm gonna just do the summary, and if we have to dive into this later because folks ask the right questions, or want to just play with it, I think it's worth doing. There's a debt schedule here. We have 2 lenders committed. One is more traditional, like commercial lender for hospitality. That's Jefferson Bank, based in Texas. And another lender is committed for the vertical construction of the Icon stuff, which is Lima 1. It's a little more expensive. It's prime +3 and all of those numbers, whereas Jefferson's prime +0.5. Those are here in this pro forma. If you really want to look at, 200 months into the future, you're welcome to play with this. Feel free. Here's the rent roll from Inspirato. It's fairly complex. Go
Sorry,
ahead, Joe.
Robert, can you zoom in once more? It's still really small on the screen here. That's better.
Yeah, we talk about the waterfront homes, the Icon homes, the semi-custom homes, basically the cost basis, which is based on real life budgeted, numbers at this time. And then some other assumptions, which include like pursuit costs. We actually had to buy some extra land on the east side to have rights to water at one chunk of the property. This mentions all the debt. We have a pro forma annual and a pro forma monthly. And I do think that's worth mentioning because our investors are going to get paid monthly, which changes the return. If you guys have looked at like X IRR versus IR, like usually a pretty sophisticated investor understands that. I just learned it myself about a year ago, where it's like, yeah, if you're paying somebody monthly, like the annual pro forma is going to miss some of the value that the investors are going to get. So we went ahead and did both the annual and the monthly. But this summary page here, the 7-year IRR of 22.45 is not calculated. That's an annual IRR. That's not calculating the fact that you're going to get monthly payments on an interim basis every single
One more
month.
time, Bobby.
Say that one more time, Joe.
Zoom in on that one more time.
There you go. So here's our annualized IRR for the 8.5 million we're raising for Shoreline. It should do this on a 7-year basis. Year 0, this would be the raise. These year 1 revenue comes from some of those liquidity cycles we talked about home buyers buying the land. Year 3, you notice that's where large return of capital is. As of right now, that's because of the developer fee paid by Inspirato, a refinance, and the sale of the homes that make up that liquidity event. And then year 4, 5, 6, 7 beyond, that's the cash flows. So the annualized IRRs are looking to be 22% over 7 years. But if you do the XIRR, and I do think it's worth mentioning, it's hard to explain. Just Google XIRR, like you'll see how it's typically used to calculate when multiple financial transactions are happening in a calendar year to the benefit of the investor. So it's really more like 25% if you take your money every month and just kind of value it at that point.
And Bobby, just to clarify for everyone, that return on investment doesn't start until after the development's complete, correct? So like estimated year 3?
Upon completion is when these larger liquidity events would occur. That's right.
Yeah.
I mean, the goal is to return everyone's capital at year 3. I should say this is all extremely conservative in terms of like at every step along the way. I feel like and the assumptions, we have tried to make sure we're over calculating the rates, the home values, what the land values it will sell for at that time. Granted, none of us know the future, 2 years from now and where things will be, but there's a good amount of like conservative guess in here. And every time there was like hey, left or right, like safe or like realistic, we always went the safe route. And still yield, investments in this range, 22 to 25%. This is before any Inspirato value. I should say that like Inspirato's granted us the ability, just like other developments, to let our investors reap the benefits of not only usage of the property itself, but even access to the Inspirato portfolio to be like your own Inspirato member. So there's value in that. You could argue what that's worth based on how much you vacation. But if you're not going to vacation much, it's probably not worth much to you. If you like luxury vacations, I think you could use it more and get more value out of it, because that is the whole goal of the membership, is to have like highly discounted. I mean, real life example for me, I take my family to Cabo every year on Thanksgiving time. We stay in an Inspirato unit that's probably $3,000 or $4,000 a night, but our Inspirato rate's like more of like the $700-800 a night, and we love it. We do it every year. I think it's a good example of like a real life situation of the type of value they offer their members. And I'm saying that's kind of the gravy on top of these returns, if that makes sense.
Yeah.
Sure. It looks like right now the raise of Alameda 33, the North Scottsdale development, will be the land acquisition price, which is 4.2 million. And I do feel like there's some folks that may want to invest in just that, or just Austin, or if they were, wanted to blend the two of them together just to kind of hedge against two markets and have access to two different vacation sites. As an owner there, I could see the benefit of that too. So I think it's worth noting, like, while this number in yellow here is what we're raising for Lake Travis, it's about 4.2 in Scottsdale.
So should we transition, Bobby and Troy, to just kind of clarify the investment options?
Yeah.
For everyone?
Yeah, I think it's a good time for Q&A. In addition to that, I'll come off this model for now.
Okay.
But yeah, I think, like I said earlier, I don't expect that you guys are all thinking you have wanted to own a home on Lake Travis or in Scottsdale, but if you somehow do, and that's realistic, like, that's one of the options, is to be a home buyer. And I would say buy it from us before you go through the Inspirato real estate portal to buy through them, because they're going to take fees. They're not going to give you some of the things we would. Yeah, that's as simple as to put it. So it's wanting to buy a home at market rate, which is still TBD. That's one access point to either one of these developments. And then the other one is to come in as the LP here, which is that number you saw, the 8.5 million.
Bobby, why don't you talk about the residence ownership when it comes to being an Inspirato landlord, and the fact that it's essentially a double net lease. You don't have to manage a thing. It really is purely an investment. And maybe that can segue into, discussing option 2, and what does it look like to own an Inspirato residence? Purely is it's an investment. It's an appreciating asset. You'll get your opportunity to build your own custom lease with Inspirato. You'll get to use it whenever you build that into your schedule. So why don't you talk a little bit about that?
Yeah. So once you own a home that Inspirato wants, which I should say is actually a pretty difficult box to check. They get submittals, probably 150 to 200 homes a day get submitted to want to be in the Inspirato portfolio. A lot of them is kind of a joke, because it's just, people think their home, they just know about Inspirato. They know they pay fixed monthly lease income, so they submit their house, but they say no to like 99.9% of what gets submitted to them. But when you co-develop with them, you are designing a house that for sure they want in the location they want. So because of that, Inspirato, if you own that house in that area, which we have 10 of them for sale, you get to negotiate with Inspirato your own lease, which is really the biggest factor in that, is how much you want to use it. Like, if I want to use my house at all the holidays and don't want to open up the calendar, the lease is going to be a lot smaller. But if I say Inspirato only want to use it 2 weeks of the year when it's non-peak, then you're going to get a much better lease from Inspirato. So that's what, like Troy said, it's your own house that you own, that you have to negotiate your own lease with, and have your own relationship with, and have your own membership with Inspirato. But it is nice. I speak from experience. The home in Breckenridge we built, like, the second they took it over, like, I never had to worry about maintenance again. The hot tub was always clean when we got there. The home was perfect. Like, they even have like an owner, like, closet for like linens and stuff. Like, if you own a house with them, whenever the owner comes to their house, they make it awesome for you, just like they would any Inspirato member, but with a few more tweaks for the owner. Yeah, full service construction draw management, that's in here. That's like, if you're choosing to buy the house, we would kind of manage that process for you. What else? Yeah, I think that's the gist of it. I don't know if you guys have short-term rentals, like if you have like a Vacasa managing or somebody like that, like, Essentially, that's what you're getting. But you get to negotiate your own lease with Inspirato because they're paying guaranteed fixed monthly income. They're not rev share, which is what you see a lot of Vacasa, like Airbnb type activity, which kind of eliminates the risk for Vacasa and the manager. But is Inspirato situation, like they're front loading the lease, they're committing to it, like they're essentially, they call it inventory risk is the word that's, they use internally. Like they take on the risk on the inventory to guarantee you a payment per month, which allows you to get a better appraisal, to get a better loan, to make your lender happy. Like, I think owning a house isn't a bad situation, but you still own a house, right? Like you still got to like make sure you know where the mail's going, like pay taxes. That's the one they don't pay, things like that. So I think you have to want to own a house. And then I would also say, like, you have to want to own a house in North Scottsdale and in nearby Austin. So if anybody fits that mold, like we should talk about it, because I do think you can help, as a investor here. But a lot of the times, the most interest we're seeing is folks just want to be a part of the LP and the equity raise of the ownership of the resort.
Good stuff. So the minimum increment investment option one is 50,000, and this is Bobby kind of shared. You have the opportunity with option number 2. Does anyone have any questions over the investment opportunity? Anything that Bobby's just gone over, Troy's gone over? You just kind of open it up for Q&A now. Feel free to unmute yourself or just post it in the chat.
One thing I haven't mentioned.
Hey, this is Jared. So, hey, what kind of visibility do we have? Say we invest the $50,000. What kind of visibility do we have in viewing costs and all of that as you move forward through the project? What kind of visibility do we have into all the numbers?
I think, I don't know why we wouldn't hide that stuff. I feel like the whole time, I feel like I think it helps to have the investor accountability, the transparency. I think it makes us all sharper. I don't think there's anything that's not worth sharing. I think it's just a matter of kind of requesting it. Like what would someone want to see? But yeah, I would say there's nothing to hide there at all. So anything.
I was going to say, Jared, what will probably happen is I'll probably give, a monthly update, because I'll be in touch with the team. Bobby and Troy will be always meeting and stuff, and I'll probably be giving a monthly update on just what's going on in an email. And, I'm just a call away as far as questions. We can always get Bobby and Troy on the phone. But yeah, to piggyback on what Bobby said, there's full transparency here, the entire process.
Sure. All right. Thank you.
Yeah, thanks, Jared.
I should say timeline. The close of the land Alameda right now is targeted for January 31st. And then the conversion of the loan to construction is March 12th right now at Shoreline. So we're trying to get a commitment of capital, like, I don't know, month and a half before that, with the intention to raise and have collected everything like 10 days before those dates. So Troy, I didn't see that listed anywhere in these decks, the timeline. Maybe that's in the email copy.
Yeah,
but I do think it's worth mentioning. It's in the next 30 to 60 days for each project.
Yep.
Any other questions? Yeah, Michelle's got all the questions. I was going to say, Bobby and Troy.
Go for it, Michelle.
Because
I'm sure people are wondering it anyway. So go ahead.
Right. So, have y'all discussed, come up with what kind of benefits as far as investors would have is there a time of year everyone's going to go out once? Is there going to be like, I know you had offered that before it's built, there's a house there now, like
Of course she wants to talk about the fun stuff.
Yeah, talk about the fun stuff. I don't know if you guys have laid that all out or anything, but just curious. Go ahead.
Yeah, I mean, I feel like I've told everybody this that's considered investing. I was like, you should go see it. Like it's it's a home, it's a single family home sitting on the 60 acres now. And it's often vacant, you know, so I've told folks that are considering investing, like, if you need to go stay there, go. Like, they cost us managing the house now for us on short-term rental, but it's listed at such a high nightly rate that it has minimal bookings on purpose. So yeah, anyone that's considering putting their money into it, I think should go stay there. Including you, Michelle and Zoe, you should go check it
Yeah.
out.
Yes.
I do feel like what it looks like now is just gonna look so different than what it will be. But it's still like to get a feel for the area, to make the drive, you know, drive the 52 minutes from the airport or whatever it is, like it's worth seeing.
Very cool.
Yeah, and just
Thank
to
you.
give some, hey guys, just give some feedback too. I've actually flown out there and I've toured both properties with Bobby over in the Austin area. I actually used to live in the Austin area a little while back, so this one definitely piqued a lot of interest to work with the guys on. Along with the Scottsdale property, we went to visit that with Troy, and I mean the land's beautiful. There's no doubt that the land is very scenic. I mean, over in Austin by the lake, I would highly recommend you guys to take a flight out there, and it's a lot of fun too. So if you like the fun part, that's kind of the fun part about it, is being able to go visit the properties. Bobby, if anybody's looking to get in, I would, you know, as far as like timeline, so and again, maybe do a group trip down there, but if anyone's looking to get in, to put in, you know, 50,000, 100,000, 250, whatever it is there going to be timelines to get that in? And is it more advantageous to get that in, you know, let's say by end of year, or, you know, first quarter of next year, versus the offering, you know, maybe not getting as good of an offering if they come in mid next year?
I haven't thought that far. I feel like it's a good question, but I feel like the raise is upon the conversion of the debt, you know. I think, you know, I've carried a good chunk of these costs personally myself, just to keep it moving. And I think there's going to come a date, which is, you know, really that conversion date, March 12th, where it's like, this is where we need our committed partners. And, you know, for the two lenders, like, I think we actually need to declare that. So if we were to let anybody come in later, it would just be a replacement of like mine or somebody else's equity in it. Not that I'm opposed to it, but I think it would be more of a headache from a just paperwork standpoint. But yeah, I feel like if anyone's excited or involved, like, we should consider that combo the next 30 to 60 days.
It'd probably be good to get like pledges in by the end of the month, and if anybody wants to fly out there to personally look at it for commitment, you know, probably next month or so.
I think so. I think that sounds about right. Yeah, for Shoreline, for Lake Travis. Yeah, I think we're saying, what was that, Troy, that date? By the end of February 1st, we want commitments in, and then raised by March 1st for Shoreline.
Fellas, there's a question in the chat. Is the expected return the same for both properties?
So I think Scottsdale could be better because the home values are so much higher there. I think it's a hard one to answer, because I think, and here's why. When you play with this model, you actually have a higher IRR if we don't sell all 10 of those homes. And if you were to type in 8 instead of 10, like, you're making more money over 7 years. But if you sell a home, you're making, you know, a chunk of money faster. So I do think Scottsdale could have a better IRR in a smaller amount of time. But I do feel like it's just kind of having to predict the future to really answer that question the right way. You know, in terms of what's sold in Scottsdale, like, are we getting the 14 versus the 10 homes, you know, the zoning favor there. So I would say definitely about the same, but, you know, give or take, like, if we could just do 10, it's going to be about the same, give or take, I don't know, 3 to 5% difference better in Scottsdale. Just because it's quicker return of capital. Like, if you look at year 3 on Shoreline, I think we can return more than the capital at year 3 in Scottsdale just by making enough of those sales. Whereas in Shoreline, I think we do better if we don't sell long term.
And we will have just as much of a detailed pro forma on the North Scottsdale project, just like we've done for Lake Travis for Shoreline. So we will have the same factual data to back up, just like we've prepared for Lake Travis. So those numbers will be there. That North Scottsdale project has literally been a whirlwind of about 30 days. So we are rapidly, putting that all together, and certainly would have that same kind of a pro forma to back up everything that we're saying.
Yeah.
Yeah, and I do like the blend model too, if Bobby, that you can kind of invest in both. So if you're again, Lake Travis is one of the most popular lakes. You can't recreate, water. So, and Scottsdale is beautiful too. So two great areas. Even splitting up an investment on both is good. I think also, Zoe, what your wife was talking about with the economy, I mean, obviously everyone's kind of concerned about that. What I do like is the fact that if Inspirato is doing like a 10-year lease, it doesn't really matter because they're paying either way, and it's a public company. So I do like the fact that you don't have to worry too much, and the houses essentially are just going to keep appreciating these markets either way.
Yeah, that's the thing with the economies too. With all the studies that we've seen and just watching what happens with the housing economy over the history of the housing markets is, you hold on to these properties long enough, they will eventually, the values will eventually come back. And so I think having, a lease agreement with Inspirato for a 7-year span, which typically will cover a full, economic cycle in the housing market.
Mhm.
And that, in addition to the fact that even with economic recessions, we typically see housing values stay strong. The only one time that was really not the case was, the 08, 09. And that was really more due to a mortgage crash than anything else. Just a lot of bad loans out there. So those kind of things going on with our economy right now. That's not really a concern as far as, there's great loans out there. There's a lot of people with equity. The economic issues are more on the economic side, not the housing side. So I think that's something that goes well in our favor too. Let's see, another question. Can you split the $50K investment into both projects, or would it be a minimum of $100K?
Yeah, I think initially we thought it was going to be much higher per project because, but I think we've kind of embraced this. We can go faster, farther together approach just because Inspirato has thrown so many markets at us where we want to expand to. So I feel like having more investors per project would make sense. I feel like it's doable, even though initially we would have said no. I think if that's a real life conversation, we should have that offline. I think we'd be open to it.
Yeah.
Awesome.
Expand the perpetuity ownership model. So,
Yeah, you see that, Bobby, on the perpetuity?
yeah. I think what that's saying is,
Beyond the capital return.
yeah, like if we decide, I think we have 2 killer exit options here. Both are good. You could sell the resort because it's got an amazing lease attached to it, which, if there's buyers for that, or you could keep it and own it and collect the cash flow after you've fully returned your capital. So I think that's where it's, I think that's essentially what it's saying there.
Yeah. So upon that capital return, you guys, it's not basically, hey, thanks for your investment, and we'll contact you on the next one. It's a, hey, your capital is in, it's invested, it's returned upon completion. And then, there is that, Bobby, would you say the pro rata share of, everything moving forward?
The cash flow, yeah. Like you own a chunk of that life cycle of the cash flow. Like in year 7, if we decide to re-up the lease, which would only be higher at that time, and we decide to not sell it, which I think could be likely the wise move at the time, then you do another refinance, return more capital, and then you still own something. So that's kind of a year 7 liquidity event. Like I think that's essentially what you saw earlier. Like there's multiple like cycles of liquidity events throughout.
So basically, there's a cash flow play that can be anticipated all the way up until we actually sell the entire development.
Yeah, right. Which, by the way, that land is left vacant. Well, having just known this model before and researched it, like I was mentioning earlier about like the Ritz-Carlton, the Four Seasons model with their resorts, the land in the northwest corner is being left open, not for us to develop, but if we have a buyer one day that truly wants to buy this, like one of the questions any buyer buys anything, it's, you know, they ask the question, can I grow this? And the answer to that question would be a very quick and easy yes, because we left, you know, an acre and a half that could be a high rise, which we're actually getting it permitted now with no restrictions. Like we're getting a structure permitted there now, not that we plan to build it, but if the buyer who would buy this from us one day would have the ability to grow what they're buying from us. So it only kind of supports the value there of what we'd sell. So when it says future development, I would say that development's only from the buyer, likely not from us. And I want, again, can't predict the future, but 7 years from now, the world could look very different.
Yeah.
And next question is good, Jake. I think Inspirato normally negotiates a 6 to 12 month out with their leases based on, like, you know, no restrictions. Like they can get out, they decide they want out. We've pushed that to 18 months with them. So if they decided they want out, we have at least 18 months to find backup or sell something, you know, or whatever we self-manage, whatever we decide to do. And I think it's because our financial commitment is so large in the front end to build these, where they're willing to stretch on that. It also gives them, they know there's going to be an absorption rate cycle for them. Inspirato, their members are going to have to eventually book these vacations and learn, like want to revisit the place. So it's going to take them time to like absorb the inventory, but that's kind of what they're paying for. So 18 months is our deal, which should be plenty of time if we had to pivot.
Good stuff. Any other questions?
One thing
Yeah, sorry, go ahead, Chris.
Yeah, thanks. One thing that was really unique too, I don't know if you want to mention, was some of the tax savings with it being agriculture, or I forgot the details on it, but I know that was a pretty cool advantage with some of that.
Good call. Yeah, it's zoned ag exempt. Texas, there's something called it's ag exemption, which they have that more than Texas, but there's also a Texas wildlife exemption that is actually a lot easier to maintain than ag, because you don't have to have cattle. Like you essentially have to do like 3 out of 10 different things, all of which we already do. Like it's like have a high fence. There's like bird feeders. There's like basically show that you care about an element of wildlife, which we do. But I will say the tax benefit of what we retain there, yeah, we'd probably save in this development. It'd be, you know, passed on to all of us, like $200,000 to $250,000 of like, if it was truly just resort and didn't have the wildlife exemption, we'd pay a lot more in taxes. And the pro forma bakes that in, so.
Cool. Troy, do you want to quickly just address, if anyone's interested in investing, what does the next steps look like with that?
Yeah, well, I think the next steps is, you know, we'd like to have kind of the one-on-one conversation, so to speak. I think just again, in our nature and Praso Ventures and our heart behind this is that it is incredibly relational. And so I think we want to build that relationship, you know, with you, and understanding what are your desires and goals for the future. You know, so that way it goes beyond just a financial, you know, decision, so to speak, where that, you know, this is going to be a long play, a long run for us. And, you know, as Bobby had mentioned, you know, doing it all together is exciting. And so I would say next step, Zoe, you know, whomever is interested, let's connect off of here more, you know, one-on-one with those individuals. And then we can get, you know, letters of commitment and, you know, and then provide, you know, certainly the bank info whenever it comes time to that date of actual funding.
Perfect. So yeah, everyone just let me know if you're interested, and then I can get you guys connected and get that set up, whether that's a conference call or another Zoom call or just directly a phone call with Troy. And yeah, I think that's pretty much it. Does anyone have any other questions? Bobby, Troy, is there anything else that we need to address or share? I think you guys did a good job covering everything.
You know, somebody asked me the other day about like the biggest risks. I feel like in any development, it's actually completing it. I think this is where I had mentioned this, you know, getting through, like having lender commitment, having the team in place, which some of the slides, I don't know if we showed them the team in place. We have an excellent team in both cities. I think leaning on Troy's, you know, dad's background in Scottsdale is a great team for execution. And then we have in Austin's excellent. But I should say this, if dirt never moves and it doesn't, like, you essentially, we bought this land for 6.5 million. The next day we were offered 11.5 million from Toll Brothers, a home builder. Like, you have supported value in the land in itself, which again is why you invest in real estate, you know, because you have something you can sell at the end of the day. In this case, you can sell it for more than you're in it for. So I do think it's worth letting people know, like, what is, you know, some of all the risks to be aware of. We didn't talk about that one at all. So it's real life. You know, some people can't execute in construction. So that's what that looks like.
Awesome.
Yeah, and last thing to add on that, you know, and one thing that I've always appreciated, you know, with Bobby is, as you know, we've now launched 7 years in with Proso Ventures, is always looking for things and finding things that have multiple exit options, right? And that's, you know, essentially our duty to investors, and as we've grown and launched Proso in fielding friends and family investments, is it's our duty to be responsible in finding deals and finding ways that have multiple exit options, right? So as Bobby alluded to, you know, finding deals that, you know, the land in and of itself has value. The North Scottsdale property is an assemblage of 9 different owners, older individuals. That is, it wasn't an easy task by any means for them to pull together 9 different families into one deal. So, you know, there's land value in a land play just in and of itself. So just to add on to that, it's kind of our responsibility, I feel like, and something that I've always watched and seen that, you know, Bobby has done very well, is finding things that have multiple exit options, whether it's, you know, in the land itself or, you know, in the actual deal itself, whether it's selling early or, you know, down the road. There's always different avenues and different off ramps, so to speak.
Yeah, that's good.
Yeah. Awesome. Yeah, I'm excited, guys. Appreciate everyone being on. And just to add to what Troy and Bobby just shared, you know, I think the other thing too, just to remind everyone that this is hopefully something that we can be doing for the next 10 years with whoever joins us in this journey. Because, you know, as we started off, just want to kind of show everybody this one more time, like, these locations is something that we're going to ideally be the go-to for Inspirato moving forward. And like I said, that they have to deploy capital to these types of projects. So our goal, you know, and why we want to be really relational about this is, you know, it's kind of like investors that's going to join in on this is going to have first dibs for all these other projects moving forward over the next however many years. So this could be really something that, you know, we're trying to build over not just one, not just 2 development opportunities, but multiple moving forward. So I think that's a really exciting forecast for us to look forward to. But yeah, appreciate everyone being on. If there isn't any final questions, if anything comes up at the end or after we're done here, if you guys have any questions, just let me know and I can get you guys connected with Robert and Troy. And yeah, I think that concludes our time. Thanks everyone for being on. And I'll get out the recording to this video as well to everybody, whoever wants to share it with additional people that weren't able to make it. So
Cool.
make sure got a couple of chat.
Thank you, everybody.
Yeah, thank you guys for taking the time. Really appreciate it.
Absolutely.
Thanks, guys.
Thank you so much.
Y'all have a blessed day.